doesn't feel right to me. So let's do this morning market update. Then we'll head over to with YouTube. Then we'll head on over to the room. We'll get focused and locked in. All right. Good morning, YouTube. Good morning, trading room. I hope you guys are having a wonderful start to the day. I hope you had an awesome weekend as well, and got a time to recharge. Because man, these markets are kind of nuts these days, and we're starting another day of volatility. We're gonna have some fun. Let's look at the news and then we're going to turn around and we are going to um, talk about the market. I got the trading plan ready. Allow me to open up the camera and we should be good to go. I am in standing mode. Pardon the late start. Bit of a late start to the day today. But yeah, here we go. We should be all right. This should be good enough. Whatever. All right. So this morning, futures are down. They're down a lot. Big gap lower overnight. It seems like, I don't know, all of a sudden people are afraid. The war is escalating, but when the war started, the market was buying stocks. Suddenly they're fearful. They don't know. You're not here to kind of make sense of everything. You're not here to explain things. Leave that to the news and the pundits. They'll always have an explanation after the fact. Today, they'll always tell you why yesterday happened. Traders, we're just trying to give yourself the highest probability here to take shots. So S&P is down, Nasdaq's down, Russell, everything is down over 1% this morning. All right, Russell's underperforming extremely hard. Small caps getting hit on rising energy costs, renewed Fed hiking pricing, and just the fears overall that are driven and created by this geopolitical landscape. All right, in the FX space and Forex, dollar index is up to 99.29. That's trading at the upper end of the range with a bid being priced into the dollar with safe haven status. When bad things happen, the dollar ironically will increase as people go and park money into it for safe haven bidding, and it's seeing a lot of flows from that globally. All right, US Japanese yen's also up at 158.38 level. It's pushing into intervention territory. This is one to watch. The yen has, staggering effects on the S&P 500 and US markets when the right conditions are met. The right conditions would be getting above that 160 zone. All right, Bank of Japan action is possible and a reaction is also possible in the United States. Keep an eye on it. It's getting close to that intervention level. All right, the key story this morning is energy markets. All right, crude oil. Crude oil is up another 10%. Brent is up 12%, and it opened as high as plus 30% intraday, which is bonkers. All right, it briefly touched the $120 per barrel level before it pulled back. All right, the catalyst for the pullback this morning is we have a G7 emergency call that's taking place at 8:30 a.m. Eastern, so it's happening right now. I'll be looking for some news updates here on the portal in just one moment. All right, they're discussing whether or not they should release more barrels of oil through the SPDR, the special right drawing rights. They have a stockpile of crude oil inventory, and it's been depleted already, but they're thinking about releasing more, which would create supply, which would push prices lower. All right, everyone is noticing it at the pumps, including me, having traded a G-Wagon and S-Class for a Hyundai Palisade and pumping 87 gas in one of my cars for the first time in, holy crap, a long time. I'm like, wow, this is a lot of gas for 87. This was supposed to be cheaper. I know people are feeling it at the pumps 100%. Prices have gone up so much. I'm in South Florida where oil and gas tends to be slightly cheaper than a lot cheaper than from Canada, where I spent a lot of time in my life. My gosh, things are getting bid up quite a bit. All right, but the thing is, with the special drawing rights, you're going to release some barrels, but you have limited firepower for that because you have a limited quantity, a limited supply of this oil. So how much do you want to draw down your special drawing rights and your reserve when you're going to have to replenish it? And hopefully with cheaper barrels per oil, what is the average cost base per barrel in that reserve? All right, these are the questions that are going to be discussed. And the option is to put some supply out there in the market. If that happens, oil will have a little bit of a pullback. But I think the catalyst rather, not Cadillac, the catalyst with Iran, as long as that's going on, it's just going to deplete the reserves, and we're going to be at this point again in the near future. So this is a temporary measure. Let's see how oil reacts, but that is the story of the night. All right, officials are discussing 300 to 400 million barrel draw. That's about 25 to 35% of their 1.2 billion stockpile. So you see how much they have. 1.2 billion barrels is a lot. 25, 30% of it would give um some reprieve temporarily, but just keep in mind that that's just roughly about a day and a half worth of oil flows that goes through the Strait of Hormuz, which is what's kind of been pushing a lot of the prices up. All right, no ships are allowed through except Chinese ones. There's a lot of tankers of oil tankers identifying as Chinese ships to get through, but that's a risk they take. So the situation there is wild. Mizu Bank has oil being at $100. They say it's here to stay. 130 to 150 range is possible, and this is the consequence of war, sadly. Well, this is one of the economic consequences. Let's not forget the real consequence, human casualty. So my heart goes out to the people first and foremost. All right, we'll figure out higher oil. It's not as bad as what's happening to the actual people being displaced in this situation. All right, gold, spot gold's down 1.4% today. Crypto's up 3.2. It's back above 68K on Bitcoin. Ethereum's up 3.6, back above 2K. The big event today is a G7 call ongoing at the moment. New York Fed survey of consumer expectations at 11 a.m. And we got a couple of European Central Bank speakers that will be speaking about the European Central Bank. All right, let's turn around. Let's get on the charts. We got some stories to tell and a trading plan to build for us for this morning. And I am not going to forget to hit record for our trading room. So hello, trading room. You'll be joining us in replay just as we're building the plan, which is what we kind of want. You can watch the rest on YouTube for the news component. All right, so here's the Dilio. Morning, Prashant. Morning, Joseph. Morning, Tilt 59. Good morning to all of you guys on YouTube. All right, here is the trading plan then for today. And we start out by telling ourselves stories. And we love stories. Okay, the trading plan is this. The story over, or the US session, the prior US session is where we begin today's trading plan. All right, the market opened on Friday at 67.52 half. That was the opening price. All right, sellers took control right away and pushed prices lower. All right, 67.20 was really big, massive level of support. We were wondering if we get below it, and if we could, we were looking to start selling rallies on the break and retest of it. But all we did was two head fakes, two bear traps, rallied up, second bear trap, rallied up. The short of the day for us, and pretty much the only trade I took on Friday, was getting short this level. I got some, but not. It's a decent trade, well executed trade on the plan. We had a lot of imbalances here into these 40 to 50s, mid 40s, I would say. Took the trade. I was only one and done for the day, and it was Friday. I wanted to go on and enjoy my weekend, but I did say this failed low here would probably lead to some buy stops. And the things we saw at this buy amount, the yellow level, which is now going to be our flip zone, was a green level, which was huge, huge imbalancing in the market. And I told the team this is one of those buy stops that you could kind of predict and just go ahead and buy that would work out. And sure enough, there it was. I know the team caught some of these buy stops. When I have a flip zone, I don't go long unless we get above it. And on Friday, we had the flip zone up top at the, I believe, 68.09 here. Okay. Took a shot, like I said, covered all that. All right. But then the rally on the buy stops was only good enough for a buy stop rally. We hit a wall here. This was a key level, a lot of selling as well that started this wall. And this is what I tell you guys on YouTube, and for the people in the room, you understand what I'm blabbing at now because you've been with me for a while. But these levels that develop from order flow are some of the most powerful levels that you'll have. You have all these tools that you think are important, like volume profile, TPO, and past price action, and you're extending these levels. You're like, this is my level. But those levels really don't matter in the grand scheme of things. What matters is what will the market construct as a new level. And it has the ability to do that if you watch the right things, like the auction. And this is an auction generated level that held so good, right? It's as easy as that. It was impossible to have beforehand because it developed in real time. So the best levels you don't see yet, but if you follow order flow, you'll see future levels for the day. and be on the right side. It's impossible to not be. All right, so 1, 2, 3, 4, 5, 6 failures of that going into the rest of the day on Friday. All right, and then we sold off to pretty much close right below the open at 67.43 quarter on a 64 3/4 point range for the day, which is the lowest in quite a few days. But volume was still extremely high, 1.969 M for the whole session. All right. And then traders off went off for the weekend with confidence that they held off the Bears that morning. And then, oh boy, does it get ugly. Then the weekend happens. Globex reopens on Sunday with a 54-point gap lower. That's a big gap, bigger than the gap of the actual war. To be honest with you, the gap of the war was like 30 points. The escalation of the conflict for some reason is spooking people more now. I don't know. I'm still confused as to the first week and the reaction. It was such a wrong reaction according to logic, but it's the right reaction according to the market. So if you go and fight it, you would have lost a lot. You kind of got to go with it. So we got a 54-point gap. Sellers pressed really hard and printed the overnight low here at 65.84. We're inside of the 65 handle. This is like going to late August, mid September levels of last year. So we were kind of, 65 handle is serious business. We haven't been down there in a while. All right. So we hit the 65 handle, 84.5 is the print on the overnight low. Then around 10 p.m., we start reversing that momentum. Buyers come in on buy stops. London open, we start reversing that momentum even more, and we print the majority of the upside, which is great. All right, we ran up to the 67.01 half overnight high. Big GEX level there as well. You can see it on the chart. All right. Um, and that's kind of where we're at the moment. We have a whopping 807,000 contracts. People ask me when I say, "Oh, well, we had 180,000 overnight. What is good volume for an overnight session?" Well, 807,000 isn't great volume. It's actually insane volume. Some days you're looking at that by noon, by 1 p.m. So heavy volume day on this downside, very heavy volume day, and you could expect quite a bit of volatility today, but we'll turn that into opportunity. Volatility is not just aimless market moves. It's you have opportunities within the range of your plan. All right. So we moonshot on the open. We have a range of 117 points overnight, which the overnight range is already greater than Friday's entire US range. And it's almost triple that. All right. And, the bulls were good enough to retest the lower ends of where this gap is. We filled some of it in. The gap towards the top is up here. All right. So here's a trading plan. And this trading plan is actually quite simple today. The flip zone is 67.35. I did move it. I had it initially at the 20, and then I thought about it. I don't want to be long right as the gap's closing, and we have really where the bull momentum started from. The bull momentum on Friday didn't start from the break of the 20, started from the buy stops. All I did was convert this buy stop level to the flip zone because it was such a powerful level for Friday. All right, and I think above here is where the buyers are at. Below there, I wouldn't buy this thing with your money. All right. So what we have up there is we're above the prior day low. We've established where the buy stop zone was going to be from Friday. We're using that as the flip zone today. It was that powerful. That's the beauty of order flow. Sell levels of interest then is going to be the 6700s, the 15 to 20s, and the 30 to 35s. These three are our levels of selling strength. All right. Downside, we got to get the downside through the overnight low pretty quickly this morning. If we have a reversal, if we have downside and reversal at any of these levels, like around the 20s, the 40s, we're gonna probably start putting in a false low or a failed low and then continue upward. So this morning it's all about timing and make sure the first trade is a good trade, not just a trade, one of many, but one that you're going to be proud of. All right, buyers have driven price up higher from the overnight drop on the X account. I X'd, I guess, that we had a lot of strong buy tape at 23, 45, and 67. So that means buy levels on the way up. So these are levels that would be potential failures. And guess what? They actually line up pretty spot on with the GX levels, the gamma levels that you see here on the chart. They line up like tick to tick almost. And what a surprise. All right. What a surprise. Gamma is impacting the market. I've never seen gamma be as useful as a tool for futures as it has been this recent, couple months. And options is actually starting to influence the futures market, and options is responsible for a lot of the reversals and levels that come into play. So gamma is absolutely mandatory in today's day and age. All right. Question is, do sellers use the U.S. Open rally as a price opportunity to sell into, or will buyers get excited on moves lower to start buying for the lowest level since November 2025? Question here is going to be answered by what happens, I think, the developments. Let me take a look at if there's any news from this G7 meeting, um, which there definitely will be. It was at 8:30. G7 to discuss oil reserves released today. So they're discussing it. I think it's a private and closed meeting. It's obviously not televised. So watch for that. That's going to be a tape bomb potentially for the oil market and energy markets, not as much for S&P, but do be like cautious of it and cognizant of it. And I have the news squawk running as we speak, and let's see if anything comes out. You just heard I connected. All right, gamma levels. Um, Zero DTE call resistance is a 6850. It's in the 68 handle, far away from it. High vol level 6810. That's a gamma flip. All right, net GX net gamma is minus 114 million, which means essentially that dealers will be selling weakness and buying strength. It means they extend the trend. Dealers extend trends today. They're not fading it. All right, it's a volatile day. We're gonna get some movement. AMP is raising their margins to 2 times the usual day trade. I think I saw this morning it's 80 per micro from 40 and 800 per mini on the ES from 500 or from 400 if you have reduced margin with them. All right, so margins are up, but I think that's very reasonable of AMP because they could very easily go to 100% the exchange and make you pay $25,000 per contract for the mini. All right, that's full margin on CME. What AMP is doing is reduce margin on the strength of their risk management and on the strength of trying to serve retail and to provide them a place to trade. So we got to give them big kudos. I love AMP. I love Dan, the owner there. Um, yeah, great company. That's all I got to say. I am not an introducing broker, so I can't refer you to them officially through a link, but check out AMP. I love AMP. I use AMP. All right, you guys have a great day, YouTube. That's all I got. We got to get in the team here with Zoom and do some more order flow stuff and get ready for the next best trade. Love you guys. Percent. How much stock do you put into gamma, call walls, etc.? A lot, percent. I basically it's just a level. There's many ways to interpret it. To me, it's a level, but over the last couple months, the amount of times that the S&P 500 has pinned to a big level, especially zero DTE call levels and put levels, plus the gamma flip zone, plus knowing that the gamma is net negative, is super important for me. Yeah, so it really is. Prashant, have a great day, bro. Everyone on YouTube, Tilt, Joseph, you guys have an awesome rest of the session. Traders in the room, hang tight here. We're about to start. I got some stuff for you today, including some order flow. Let's get into it. YouTube, love you, man, and women. You guys have